Well, having a seller stay after the acquisition, not just for the transition period, which most sellers will stay for a month, 2, 3, to provide for an orderly transition of the business. But that's not what we're talking about here. We're talking about where the seller stays on and continues to run the company for several years at least after the company is acquired. And the reason that that's important is it matters to the lenders. They'll be more likely to lend on the purchase of the business because they know that the company has worked successfully in the past and that the same party will be running it into the future. And I usually give or create a way for that seller to retain a 15 to 25% interest in the business so that they win when they run the company well afterwards. And what we find is that our most successful acquisitions after post close are those where the seller stays on, continues to run the business, and in fact is energized by the way in which you acquired the company. So let me give you an example of what I mean. If you just acquire the company and let it go exactly the way it was running before, well, the seller isn't necessarily overly excited about that because they may even be at a point in their life where the reason that they're selling is the business doesn't generate their enthusiasm anymore. It doesn't generate energy anymore. So when we acquire a company, what we do is we identify that seller's real passion for the business. In other words, if we were to help that seller to now grow this business by either working out arrangements where with our contacts we can get them growth capital, or whereby we can increase their marketing capabilities, or make them part of a company that's going to go public, so that there's a huge win for them and a whole new energy that's going to come into their business to make it grow. That's where they get really excited about staying with the company and really putting their best efforts forward to make it grow. Now you've got an energized partner in your business who knows how to run it, knows how to make it successful. You're helping to empower them in the way in which you structure the acquisition and how you bring benefits to that acquisition after the close. You put those elements together, you're going to have a very successful acquisition. More easily financed because the person who's proven they can run it is running it. So investors and lenders are going to be very comfortable loaning and investing money in the business because they're investing in someone whose management they already know works.